Hello traders, welcome to your technical market update for Monday the 23rd of February 2015. Let's have a quick look at the price action. We'll go through from chart to chart and see what we have for trading opportunities this week, and let's relate those back to the fundamental views. So here we are on the daily chart on the New Zealand. We spoke about last week towards the end that this upward trend rally is starting to find its way into a fairly strong resistance area. As we pull a Fibonacci from the lows to the high, there is a Fib 50 where it's at right now, and then we have a very strong Fib 38.2 at 76.2 cents. Now that's where historical support was broken and the market just gave way, and we've seen some pretty dramatic falls. Now we are seeing a pullback where if we do find a significant resistance area, we shall then see the market continue on the long-term trend. So that's one to keep an eye out. We did see last week a bit of a falling star candle pattern here with a bullish candle, an indecision, and then a bearish candle, which was made up of approximately 50% of the bullish candle. And since then, the market hasn't done a lot. So we are now looking for momentum to choose whether we are actually going to make our way up and test into this area, or if we're going to start a larger downtrend. The best way to capture this would be to go to some smaller time frames, do some charting, and try and see if we start to break some major support and resistance level. If I'm on a 4-hour chart now, and as you can see, 75 cents seems to be where it's hovering around. We still got the gap over here that is yet to be closed, and I think that we will have support, which was once resistance through here, could now become support before we even start to consider any bearish trades and taking money to the downside. So for now, I'm not prepared to call the top on the New Zealand versus the US, but this will start to come into play as we move closer towards next month, and we'll start to discuss the RMB's policy moving forward, whether there's another rate cut in the near future. Australian dollar is pretty much the same, except the pullback hasn't been quite as strong as the New Zealand, and that's due to New Zealand's dairy prices have actually improved in the auctions, and Australia hasn't had much going for it at all. So we've just been in this consolidation pattern after this massive move. We've still got the resistance levels at the 61.8 and then at the Fib 50 to be contested. We'll have to wait and see what happens, but for now, there's been very strong resistance levels here at 78.5 cents. We've bounced off it a few times and just haven't been able to break through it. And then once we've got this double bottom here taken out, it's definitely further lows for the Australian dollar. As I've mentioned many times, I am a bear in the Australian dollar market. I'm not prepared to take any long positions. There's no fundamental reason for it, and we are technically in a downtrend, so it's not the high probability trade. However, I will be looking for significant signs of resistance for us to enter short. Now, the Great British Pound, as I mentioned in the fundamental video, we had the breakout here, and then we had poor retail sales on Friday, and this led to the rally to come to a bit of a stall. However, I'm not overly worried. It's a backwards looking data. It doesn't have any impact or indication on what's in store for the future of the UK economy. And I think the market will shrug that off. Enthusiasm will get back in, and we'll continue to move our way through $1.55 and into $1.56. Support is still at $1.53. I think that's going to hold. There's no chance of that breaking unless we do get some surprisingly poor data. So for now, I'm still a bull. We do still have in play a Great British Pound US trade long, which I'm still in, and our stop loss is just under $1.53. So I'm still in that trade. That trade's still valid, and I'll keep you all up to date on how that progresses throughout the week. The euro had a bit more action than everybody else towards the end of last week. We're still in the consolidation band though, and as you can see, the market got a little bit excited there as the deal for an extension, a 4-month extension from Greece, was granted by the Eurozone, even though it was rejected by Germany, and we should start to see details of that plan come out this week. Now, the details of that plan, and depending on how this negotiation rolls out will determine the price action. It's not a simple yes or no answer that's going to come out of the Eurozone and all of a sudden the market will take off and rally. I think it's going to be a case of the deals will go back and forth as negotiations, and as we start to get closer and closer to a deal being accepted, the market will start pricing that in, and we should start to see momentum in either direction. So the closer we get to a deal being done, we should see a breakout and a continue on through here. If we start to think that the market is, that the players within negotiations are losing interest and there's a breakdown in communication and a Greek exit is still possible, we will start to see a breakout of this support and the momentum to take us on to the downside. My pick's still the high side. I don't believe they're going to let Greece exit, but I also don't believe there's going to be a short-term yes or no answer and the world will get on with it. The negotiation is going to be painful and long, but doesn't mean we can't make some money from it if we keep up to date with the latest headlines and news. I'll have a look at the CAD. Sorry, I'll go to the daily chart. We spoke about here the support level, which it has been able to hold up last week, and oil came off. So due to oil falling, the US dollar strength, we had some mixed data come out, but overall the US dollar is still the preferred currency right now, and it's natural for the market to come up and test this downtrend line, which it will play out whether we see a breakout of it, and then this would be a bullish flag formation right here, and a breakout of this would definitely indicate some price action to the high side, making its way up to $1.30. I think that it is definitely possible to occur this week, a breakout of this area, and I'll be keeping an eye on some trading opportunities with that. It's not uncommon after a big rally for the market to have a consolidation like this, and when the fundamentals are in the correct alignment, we will see a breakout of that and a continuation of the US dollar strength. The US dollar JAP, we are still long on this trade, and it's consolidated. It's gone nowhere for many trading sessions after that big breakout, and then we had some surprisingly weaker data. However, we still do have our stop loss under the support level here at $1.18, and $1.18.200 seems to be holding up as quite good support for now. I think it will hold, and the market is just struggling to break above 119 before it finds its footing and continues on further north. However, I am quite confident that we will start to see a trend form through here, and we should start to see momentum get carried away. Let's see if I can get ourselves. So you might be able to just get a rising channel being formed in here that might sort of grind its way higher. We'll have to wait and see. That's a bit of a pattern that I didn't think through. I just did it on the fly just then. Anyway, we'll keep an eye on that. We are still long on the US dollar JAP and the Great British Pound US. It should be a quiet session, as I mentioned, due to the Chinese New Year. And I'll be back again tomorrow. And make sure you keep an eye on the Euro news and the headlines. Until tomorrow, trade well.